You know, there are a number of issues that are likely to impact commercial real estate in 2015. Two of them are tied directly into the economy. One is the wage deflation that we've seen over the past 6 years or so, and its impacts on the overall marketplace. The other is the job growth that we've seen and whether or not it will continue throughout 2015. That has huge implications, particularly for the office market, which has been coming back pretty strongly over the last couple of years. But what we're seeing is that two of the biggest increases in terms of segment growth in jobs are in temporary jobs and in service positions. If those two continue to be strong growth areas, that's going to have some implications in terms of lack of need for new office space because you don't expand your office capacity in order to accommodate temporary workers typically. So when we see more full-time jobs, better paying jobs in terms of the wage growth issue come to the forefront, that will be a positive sign for the markets. And a lot of indications are we should start to see both of those things happen a little bit this year. One of the wild cards this year is oil prices. We've seen oil prices drop significantly, and that's likely to have a direct impact on the energy-dependent and oil-dependent states, particularly places like Texas and North Dakota, where you've seen the extraction take place. Other states like Pennsylvania, West Virginia, Oklahoma, and it'll have an impact on overall commercial construction. So the construction numbers in the oil and gas market have boomed over the last few years. If you look back over the last decade, construction usually took place within a pretty narrow band of between $12 and $15 billion a year. It peaked a year ago at about $40 billion worth of construction. Because of the lower prices, we're going to see those numbers drop pretty significantly. In the long run, if we continue to see these low oil prices, it'll actually provide an economic stimulus for the rest of the country, and we'll see other CRE segments blossom in terms of overall construction, and that'll offset the lower oil and energy-related construction numbers. But short term, it's likely to be a challenge. The good news for people looking to invest in commercial real estate in 2015 is there's plenty of capital available. And what we're seeing is an influx of an enormous amount of foreign capital in the market. Estimates range as high as $45 billion of foreign capital pouring into the U.S. commercial real estate market last year, and this year could exceed that. And that's interesting because some of that money came in from sovereign funds in some of the oil-producing countries. You wouldn't expect really quite as much of that to come in, but it's being offset by investments from South America and from a lot of places in Asia. So we are continuing to see a lot of foreign capital flow in. What's fascinating for us as we watch what's being spent in the various market sectors is that because of the low interest rates, investors tend to be overpaying a little bit in today's market, particularly in sectors like the office sector, compared to what we're seeing in terms of actual fundamentals. So the investors who are active in today's market tend to be betting on an ongoing recovery and taking on a little bit more risk than they might normally take on because the pricing of capital is so attractive. So there's a lot of capital available. The capital that's available is available at very low prices. Interest rates continue to be low, even though people like me have been predicting increases for the last 4 or 5 years, and I'll continue to predict increases in interest rates until they actually happen. But there realistically isn't going to be any reason for a huge increase in interest rates this year. So the behavior has been to take on a little bit more risk, but an appropriate level of risk, given what we're seeing in terms of employment trends and what we're seeing in terms of capital costs.